my poll workers. They don't understand that they have nothing to do with that. So not only do I have to keep peace on the line, I also have to make sure I'm protecting my poll workers inside. So at 4:35, they said, well, we're printing them now. Well, that did us no good. At 6 p.m., I called. I said, listen, I've got to be able to tell these people when these ballots are going to get here. So a gentleman got on the phone. I don't know his name. He said, yeah, we've got them done. The printing's done. We're boxing them up. We'll get them to you right away. I said, when? I said, it's 6:10. He said, it should be about 45 minutes. I said, I'm going to tell them 7:10. Are you going to have these ballots here by 7:10? Absolutely, sir. We'll have them there by 7:10. Thank you. So I went and addressed the line. At 7:05, there was no ballots. At exactly 7:10, an SUV pulled in the parking lot. I ran outside. It was our gentleman delivering ballots. I was very happy. He got out of his car. He reached in. He turned around, and he handed me a spring clip full of ballots. I said, where's my box of ballots? He said, what are you talking about? I said, where's the box of ballots they were delivering? I just talked to him. He said, this is what they gave me. A spring clip about that side with probably about 50 ballots in it. I said, you've got to be kidding me. Get on the phone, call the county again, tell them we need more ballots. I'll call as soon as I get a chance. I grabbed a stack of ballots. I ran them inside. I didn't have time to count them. I split them up in 2 piles. I gave them to the 2 tables to sign people in. At 7:15, they got the ballots. At 7:35, we were out of Republican ballots again. And now the folks who had left earlier in the day were now returning, getting in line to try to vote. And I had to go out a second time at 7:35 and tell them, folks, we in fact did get Republican ballots. We've run out a second time. I'm not sure when more ballots are coming. So we continue to run folks through, one person at a time. It takes about 5 minutes minimum for folks to vote on the electronic machine. And I knew it was going to be a very, very long, frustrating night. When I moved the line, I saw people leave. When I went out and made the announcement that we were out of ballots the second time, I saw additional people. I encouraged them to stay. I encouraged them to come back. But people were busy. They showed up to vote. I mean, state of Pennsylvania decided we're going to go to this ballot system, the handwritten ballot system, and paper ballot system. And when we did that, they also have the responsibility to make sure when people come to vote, there's ballots there for them to vote with. There's no excuse. We know the amount of people registered to vote, both Republicans and Democrats. We have history on, these elections and on how many people show up. Now, I heard that somebody said it was unprecedented turnout. Well, 24% in Warrington Township is not unprecedented turnout. When you have questions on the ballot, they're going to attract some attention, right? 18 to 24%, that was the difference. You had to take that into consideration. So I tell you, from my standpoint, from what the people told me standing in line, I know I'm out of time, I'll wrap it up very quickly. The people in Warrington Township do not believe this was an oversight. They do not believe this was a miscalculation. They believe it was a direct attack on rural Republican, predominantly white voters in Pennsylvania and in York County. And not only that, it also happened all over the state. So then the question is it a collaborated, is it a coordinated event? Someone needs to investigate this. This can never happen again in York County. We can't ever let this happen again in York County. I'll conclude my comments.
Any other public comment? Okay, hearing no more, we'll close out. We, as folks know, we don't typically do question and answer during the public comment, but I will speak on behalf of the Board of Commissioners. We did do a conference the day after the election, and the Board of Commissioners is investigating what transpired on Election Day. We've asked the public, we have to do a final certification of the votes by June 7th, so that is a priority for the county right now, but we are looking into all the things that happened on Election Day. We know we've gotten some questions regarding write-ins. We know there's some close school board races and municipal races, so for folks watching, especially if you're a candidate, we know you're eager to get those results. Just to ground you, we had 13,200 ballots that had write-ins on. Every write-in must be manually adjudicated because it is a write-in. So we are just about through the write-ins, and we are on track to certify our votes on June 7th. So once that is completed, we will be doing a very deep dive into the details of what transpired on Election Day. I think we've all gone on the record to say that it is unacceptable and cannot happen again. So just wanted to let you know we will be looking into matters, but right now the Board of Elections has to prioritize getting that final vote certified by June 7th because the statute states that we have to have our votes certified by June 7th. So, yes?
Please put in for a public comment.
Oh, yeah, sure. That was why we asked if there was any more. So if you could just, again, go to the podium, state your name, municipality, and the subject of your...
Good morning, Commissioners.
Good morning.
I'm Kay from Springersbury Township. I'm with Free PA group this morning. They're a subcommittee. They're a committee in Pennsylvania that has been helping small businesses. In conjunction with them, There is the Pennsylvania Audit the Vote PA out of Upper Pennsylvania, in which for a good 8 months, we've been researching, we've been grassroots efforts in finding out facts, finding out information to the election process in our state, the original, before this last debacle. We submitted to you this summary of what we know is facts, what we know is fraudulent, what we know based on Avico Pudigalio, who oversaw the Kathy Barnett campaign. After the election, with everything that happened there, they had canvassers go out. They got a spreadsheet on the voters in their counties, and the summary that we submitted to you come from a forensic analysis, as well as Pennsylvania canvassers in our state, that these numbers are real. With that said, we now have 67,472 citizens of Pennsylvania who want our state reps to audit the vote, a forensic audit of the 2020 election, period. We have found out through different sources and different senators that we're working with. At this moment in time, just for your information, we have Doug Mastriano, who will be going down for a briefing in Arizona. We also have found out that a number of representatives who have the ability to subpoena have not done so. We are working also with Mike Jones, Senator Mike Jones, who informed us Saturday at one of our picnics that you, Ms. Wheeler, would be open to looking into this. We also found out, because we're having a problem with the state and those in authority doing their job, that we decided to go locally. Excuse me, my mouth is dry. With that said, we have a large number of volunteers who will be going to local commissioners all over the state. If we get 2 commissioners to decide in our local county to audit the vote forensically here, whether that be taking all 4 or 5 of those in particular precinct machines and tearing them apart, we need to see, and they could have been scrubbed. However, we need to see if they were able and had the ability to be connected to the internet. Also, the mail-in ballots, as well as the new arrangement they did that this gentleman spoke of prior to this further information. One minute. Just want to make sure I got everything for you guys. Okay. What we found out is that you have the jurisdiction and clout and ability and power to put an election sorry, I'm losing my train of thought. It's called a Board of Electors, and we would like to request if you would put those Board of Electors together for the investigation and to go forth with that and to do whatever needs to be done. If we have one county in the state of Pennsylvania, Mike Lindrell's attorney has been in contact with Tony Shook and Karen Taylor Scott, who are the founders of Audit the Vote PA, for months and months and months. This is why we're at 67,000 462 citizens of our state.
Ms. Kay, just wanted to let you know that you're over your time, and I did allow additional time since we allowed Mr. Dempf to also speak for a longer period.
To wrap it up, we do have information we cannot say publicly. If you would like to be able to speak with us so that we can give you further information of the counties who are under the radar, who are right now doing what we're asking you to do. Thank you for hearing us, and we need your help.
Sure. I just actually, 2 clarifying questions for the Board of Commissioners. One, if you could reference who did the audit and document that for us so we know where the data came from. And then I think the other clarifying question is the data that you're sharing with the Board of Commissioners, that reflects the Commonwealth of Pennsylvania, not York County specific,
Yes, ma'am.
correct? Okay.
Thank you.
Sure. All right, I'll make another, just ask to make sure we haven't missed anybody. Wants to speak for public comment? Okay. If I could have a motion to adjourn?
I'll make a motion to adjourn the meeting.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? We are adjourned, and we are going to move on to Salary Board. If you will just bear with me here, I will.
Okay.
I'll just ask, Nick, is that presenting over there? Okay. Oops. I tried to make it bigger. I apologize. Yeah, sorry. I apologize.
All right. I'll make a motion to approve the minutes from the May 12th, 2021 Salary Board meeting as submitted.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. Item number 2.
I'll make a motion to approve the positions, salaries, hours of work, and fringe benefits as provided by existing collective bargaining agreements or as set forth in the York County Employee Handbook or York County Policy Manual for the following departments and row offices as stated below, with no additional benefits or concessions unless otherwise noted.
Second?
I have a motion and a second. I do want to, for the public, let folks know we do have some positions here in several of our row officers departments. So we are joined today by Allison Blue, who is our Parthonetary, who has some positions on Salary Board. And obviously, our controller is part of the Salary Board, but Greg also has some positions on the agenda today. So they're here in support of those positions that are on the agenda.
And I would like to just make one comment that there was something on the agenda in the controller's office that has to do with the deputy controller, which I'd like to abstain from that vote because it could possibly be conceived as a conflict of interest as a relative.
Yeah. So we want to make sure that's noted in the minutes and for folks watching. So, I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries.
I'll make a motion to adjourn the meeting.
Second?
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? We are adjourned, and we will move on to Retirement Board.
I'll make a motion to approve the minutes of the previous meeting held on May 12th, 2021 as submitted.
I'll second the motion.
I have a motion and a second. Any discussion? Hearing none. All those in favor signify by saying aye.
Aye.
Opposed? Motion carries. Lee, great to see you again.
Good to see you all.
Okay, and Lee has a PowerPoint with him this time. We are getting better with our visual aids here, so bear with me as I pull up Lee's information. Okay.
Don't be scared by the number of pages. We won't go through them.
I was scared when Rebecca brought them in the office.
You can see the forward part.
Thank you. Thank you.
Morning.
So for the folks watching, Lee's handing out the material that will be presented up on the screen here.
Is that the same as this? Is that the same as this?
So Lee, you'll have to help me help you when you want the pages flipped, okay?
you want me to just do it from this?
If you can do it, sure.
Yeah, because we'll be jumping by a lot of pages.
Okay, Lee, you got the control.
Okay. So this is Retirement Board of Fiduciaries. So we have a full report which really drills down in a pension fund, so we totally understand, what's going on, what's impacting the fund. Of course, we don't have to cover that every quarter. We're going to cover the highlights in these meetings, because outside of these meetings, you have a sub-investment group where we really get into the detail, which anyone's welcome to attend. Uh-oh.
Rebecca?
What should I be pointing at?
So I still think I have to.
Is that you now?
This one.
Oh, it's
Oh,
the
are you
bo-
doing it, Julie, or is he doing it?
No, I'm not touching
Okay.
it.
Okay, here we go. So just quickly, just a couple of notes just on the market environment. So it's been a very interesting 12 months, obviously. And then we'll get into your three different funds. As you see here at the top right, the economy here in the US continued to roll on in the first quarter. Came in actually above expectation, GDP at 6.4%, and that was really on the back of, increased consumer spending, which really drives GDP here in the US, and that came on the back of another round of stimulus, and then this ongoing Fed support of keeping rates near zero, and this backstopping of the economy, which has really had an impact of pouring gas on the markets, and that's why we're seeing stocks rise quite considerably. One outcome of this that we're starting to see, and you probably heard it all in the news, is inflation has started to percolate now. And if you look at the bottom right there, you can see the costs of goods sold. Expectations of prices are going to be a lot higher. And those of you that have been out and gone to Home Depot and bought lumber and gone out to buy goods, you can see that there's a significant bump in price at the moment, and that's impacting inflation. And what the Fed believe, though, got to go down for so what the Fed believe is, though, that it's really what's known as transitory, short-term in nature, because of the global supply issues we've had over the past year with the pandemic, more recently with the Colonial Pipeline and the Suez Canal. So they expect it to be short-term. And that's why on page 2 you can see 5-year tips are suggesting higher inflation than the following 5 years after that. However, we don't expect inflation to come back to the level it was pre-pandemic. There's been an awful lot of stimulus. The good news is, as it relates to your fund, is you do have a lot of real assets, infrastructure, real estate, timber, farmland. As these costs of these commodities and goods go up, you're actually getting appreciation within your portfolio, within your pension fund to hedge that, which is why you've added those over the last few years. So
I have a current event question, just that maybe not relevant, but in the news, there's been a lot about hacks of major facilities, and now they're talking about the cost of meat and other things. I know that may be short-term, but does that have an impact on this or not?
It will do a little bit on the livestock within farmland,
Right.
but it really is short-term. But what drives inflation is the actual scarcity of the good itself. So, for instance, a great example is Colonial Pipeline. That was so short in nature, it wasn't an issue. We still had plenty of gas. It was getting the gas to the people. So that wasn't really inflationary. Now, if there was a scarcity of gas to turn the pipeline off, and then that's that supply and demand issue, then that will raise prices there. But the good news is, as you're going to see shortly, you've diversified your fund across lots of different asset types now. So whenever something is a headwind, you normally have a tailwind in your fund. And that's the beauty of the fund being the size it is now, being able to diversify. Globally, the US is probably the leading economy right now. Because of the success of the vaccination programs, the economy is almost pretty much not fully open up, but close to being open up, and is well ahead of the rest of the world. And that's, again, why you're seeing better numbers here in the US, and particularly, the emerging world, such as Brazil and India. And the last one we'll just look at is just indices. What did it mean for the quarter? Well, when growth is going well, you expect equities to do well. And you can see US stocks are up 6%, international 4%, emerging markets up 2%. That has kind of continued through the second quarter here. However, international stocks are really leading the way now. The big story and news in the first quarter was bonds down 3.5%. Folks kind of forget bonds can go negative as rates rise. I mean, we've been talking about it. Again, the good news with your portfolio, you're not in a core bond, you're in intermediate gov cred, which is a little shorter duration, so you're only down 2.5, your fixed income, so it's quite a lot of savings. Within the bonds, it was just really the high yield bonds, the lower quality that was positive. As you know, you've got some high yield bonds in your portfolio now, so that again also helped to help your fixed income portfolio. And then finally, just at the bottom on the inflation sensitive, as we talked about there, you know, with inflation raising its head again, no shock to see commodities up above the broad market about 7%, and real estate as well, strong, up 8% for the quarter. So that's the indices. Let me get onto your portfolio. We'll start at the pension, and we'll go through three or four pages of the pension, and then we'll just hit the highlights for OPEB and your 457 plan. Okay, what I should do here is put my glasses on, because over the past year, one of the outcomes of this pandemic is my eyes have gone. But I do like your big screen here. This is the clearest screen I've seen in a county. It's great. So as you can see, you finished the quarter just a little under 500 million. The gains were about 19 million for the quarter. Very strong performance, up 4%, well above your policy index and your benchmark. And some of that is because since the election, well, since really the vaccine approvals, we've seen value come back more in play now and fundamentals mattering again. Remember last year I talked about the fact that the companies that did well last year were the ones that were losing money, which didn't make any sense. But the companies that are doing well this year are back to more of normalcy, the companies that have good earnings and are doing well, or expect to do well coming out of the pandemic. And you're ranked in the top quartile of all, actually top 20% of all pension funds here in the US. So far this quarter, you've had more gains. You're now sitting actually above 500 million. You're at 522 million. And your fund at the moment is now up over 8% for the year already through 5 months. So, and that's about over 1% above your benchmark. And more importantly, above your assumed rate of return again, even for this year. So even if we're flat through the remainder of this year, you know, it could be a third year in a row where you could have some gains in your portfolio, and on the back of 2 very strong years for your fund.
Can I ask you a question? I was going to bring this up.
Yeah.
You're saying now we're up about 8% this year?
So far this year.
For a fund.
Yeah.
In the newspaper, it was revealed that I think the pension fund with the state teachers program in Pennsylvania, which has billions of dollars in it, was saying that their calculation of their returns was 6.84%, and in reality, when an audit was done, it was 6.34, something like that,
Yeah.
which at their size was extremely, you know, hurtful to the operation of people running the program. What are the checks and balance system on the reporting to us about how the market performed, and we have reliable information? I'm not questioning you.
Sure. No,
I'm just saying, how is that audited or checked that we would know specifically these are correct?
Yeah, it's a great question, and obviously I'm pretty close to that state thing because I work with the Treasury, and so I was asked to opine on those numbers too. So everything that go with our system is GIPS verified. So it's the Global Investment Performance Standards. So they're the standards that are used to calculate calculate all the clients' returns that we have. And then we are actually one of only a few consultants that are verified, and they're verified by an outside vendor that come in every year, go through all the composites and rubber stamp and say they're verified. So that's kind of the difference. Aon was doing the PESAS fund. PESAS is a little different, that if that, as you know, they were July 1 through June 30th. And post the financial crisis, that fund really struggled because they had so much in private, so they had to sell everything that went down to create the liquidity. So they came up with a sharing responsibility with the employees, basically, that any year that the fund dropped below, I think whatever that number was, 5.36 or 6.36, then there would be a sharing amount that the teachers would have to put in as well. And when they first posted it, it was about 2 basis points above that, and then I think the old treasurer wanted them to do another audit, and it came in a couple of basis points below that, which now means employees need to put in. So,
Well, it sounds like we have a good system in place.
it still
checks
gets
and balances.
verified, and
Okay.
yeah. And then we, as you know, we get SEC audited as well every 4 years, and never had an issue on that. But yeah, the numbers they all go through the same time-weighted calculation of return.
Okay.
And then you're compared, as you know, to all the other public funds that within the state, within the country. So what worked for you for the quarter? Your domestic equity, as I said, lean into value and small. Your global equity managers continue to do well. And then the defensive equity, which you added in, was over 2% for the first quarter. And your private equity, which you just got in at the beginning of the year, couldn't time it any better, really. You had, one of the companies they own, they sold during the quarter for an over 70% rate of return. So you made over 10% alone just on your private equity allocation. So that all that was good attribution to performance. And then what wasn't as well as just the fixed income, as I said, as yields popped up, prices on fixed income come down. But more importantly, we look longer term, and here you look over 10 years, you've made nearly 300 million, return 8.7 a year, so quite a bit above your assumed rate of return, which is your real policy. So you've got a lot of gains in your portfolio that will help to offset any tough years ahead that you might have. So your funding should still stay relatively high over the next few years. And you're quite a bit above median. But you've done it with a lot less volatility and downside capture, and that's been really the drive over the past 6 or 7 years with the retirement board of starting to diversify more and protect a little bit more on the downside. And that's what you've been able to do. Looking ahead, again, we're not going to go over today, but the last kind of asset class that you guys are looking at with the investment committee is private debt. Just like you had a little bit of private equity, it's predominantly traditional. Similarly on the fixed income, the great thing about the private debt is every time there's a loan goes out, it gets written at that new yield of what it is. So as rates go up, fixed income prices normally come down. It doesn't impact this. So it's a very good, again, inflation hedge. As inflation goes up, rates go up, then the yield you're going to get off private debt goes up, whereas your traditional fixed income, it'll come down. So, you are well diversified. Bottom of page 19, there's a couple of slides here. You can see not only you're in US, global, and international stocks, you have private real estate, you have timber, you have farmland, you have infrastructure, you have defensive equity, which is the volatility risk premium, you have private equity, you have fixed income. So I remember being in the early 2000s, you had stocks and you had bonds. You had one manager, two managers. So you've done a lot of, as your fund has grown, you've kind of judiciously just diversified a little bit more and a little bit more. A lot of activity you can see goes on each quarter. From a universe point of view, you can see pretty much for every period you're above median, and that's very good to see. But you've done it at a lot lower volatility, as I said. And we'll just finish up on your managers here on page 27. As you can see, your US stocks up 7.6 compared to 6.3. The outperformance came from Twin, as I said, last year. That their portfolio wouldn't have done as well. You can see about 10% behind because they only invest in the high-quality type names. Similarly with Earnest. So no shock to see that one-year number, but you can see now as fundamentals are coming back into play, those funds are quite a bit ahead. On the global side, similar deal, 5.8 relative to 4.6. This time it was really led by Dodge and Cox, your value managers. You can see they're up 11.6 for the quarter and up over 70% for the year, well outperforming their bench. And then the things that did better for you last year, like your growth managers, your new perspective, that lagged a little bit for the past quarter as value came back into play. And then the new fund we had at the end of last year, you can see that at the bottom there, it was over 2% ahead for the quarter. And again, as fundamentals are coming back, you do have a little bit more quality in your fund, which is important that's coming into play. On the international side, again, some outperformance from your higher quality Schroders fund there. Defensive equity, as I said, you only just added that at the beginning of Jan. You can see 5.8 relative to 3.6. Your real estate, this is a good one actually to look at. Remember, we've been slowly winding you out of JP Morgan as we can and putting you into Clarion and a new fund called TA Realty. They have a lot less in real estate than JP Morgan. JP Morgan's the big behemoth out there. So they can't really sell their retail. They have a lot more in retail, and that's a headwind. And you see it in performance. Over the past year, JP Morgan's only done 0.7. The new fund you've been gradually putting your money in over the past 14 months has been up 2.1. It's really outperformed. And that's predominantly comes to the fact of having less in retail than the bench. So that's working well. And the final page here, your infra since inception, 4.7 relative to 2.1. Your timber farmland had a good year that last year. There was no change in price moves in the first quarter, but they are repricing some forests in the third quarter here, and they're expecting a good bump, as we've all seen with lumber prices. And more recently with the meat issue, the prices in timber and farm are going up as well. So that will benefit your fund. Private equity, as you said, you just got into it in the first quarter, but you did get about a 10% bump from the partners in that. The Harbour Vest will just continue to draw down over the next couple of years before you start getting a return from that one. And then the final one, the only one of real issue that we see is the fixed. It did lag a bit for a year. Most of our other OCIO clients were quite a bit ahead because of the accretive nature of the high yield, which really has benefited the funds. Some of that is on that M-Stone liquidity reserve. Your outflows are not that great, really, that you need a laddered bond. So we have the treasuries there now that will provide liquidity. And so that where we're talking about looking at the private credit, which is the last page I'll show. Oh, it's blank on that page. I won't show you that. But when it comes to private credit, by switching that out, your return expectation will go up about 25 basis points. But more importantly, your volatility will drop even further again because it's more diversification again. And will give you a little bit better hedge for rising rates going up and inflation going up. So that's your pension fund.
Just one question, and I should know this, remember this, but with inflation changing and the economy changing, coming out of COVID, the economics is totally different in the country right now. Do you make recommendations to us about rebalancing when I look at the numbers, and does that go through the executive group or come to the board here?
So you have a rebalancing policy in your investment policy, because the best way to deal with rebalancing is to take any emotion out of it. And just when you hit some triggers of this has gone too far out the range, you automatically, as you know, you get those weekly reports. We download your portfolio every week. You go more than 2% above in equity or below, then we just bring you back to target. It's basically like taking some winning chips off the table and pocketing them.
Okay, I thought we did that.
Yeah, so it's all,
yeah.
No one's making that. That was really an IPS decision
Right.
because it is just good practice and policy to have that, to take any emotion out of it. And the only other time you would rebalance is if, okay, we need, and this normally occurs later in the year when you've run out of your ADC you put it in. You normally sell assets down from about September onwards. You use that at a time as well to rebalance. So let's say you need 2 million come out, you're going to sell what's well above target. So that's a way of bringing rebalancing back as well.
Okay.
Okay, just on the OPEB and the DC, we'll just work off the observation sheet for you, and then I'll entertain any questions you may have on it. But as you can see, OPEB continues to do well, up over $1 million in the first quarter, and strongly up again here in the second quarter. Again, like the pension, above your policy index. Similarly, what worked well, domestic equity, defensive equity, and the high yield here is added close to 30% to your fixed income portfolio this past year. What didn't work as well was the growth equities, as we had this switch back to value coming back into play. Good news, since you started this fund, which was still less than 4 years ago, you've gained over $8 million, which you don't have to go and find in the general budget. So it was a great move to go and do this. You've returned over 9%. I know a lot of counties with this OPEB liabilities that don't have a fund would love an extra $8 million to pay out. So that was basically free money given to you by the market. And again, you've done that at low cost. The one change here we're looking at is, and this really comes on the back, I will take you one page, I guess. On this page 34, if you see this contribution, like here, all positive, you've just got money going into the fund now, and it's a long-term pool. It's because you're taking care of your daily, what your pay-as-you-go needs out of a separate account. So this is really just purely an investment account. So one of my thoughts is why sit on so much in fixed income if it's going to be a headwind as rates go up the next year or two? Maybe you can take some away from fixed income and invest it in something that will give you some kind of protection, a little bit more protection against rising rates and probably inflation. So something like a fixed income proxy. So we thought infrastructure, that's why you have it in a pension fund, but you can't, this fund is not big enough to do private, but you can do listed infrastructure. So firms that are listed on the stock exchanges that just focus on infrastructure. And so, again, if you do that, potentially a little bit more return, particularly if you source it from fixed, but the volatility doesn't change much because it's a new asset class again. And I think that'll be better for you over the next few years, especially as you're not having to go to this fund to take money out. It'll give you a little bit better potential for return if you're sourcing that from fixed income. So that's, again, a discussion we're having with the investment committee, potentially doing that. And at this point, you guys have understood infra, you've got it in your pension plan. And as we've seen this year with the hacks that are coming in, the ransomware attacks and some of these, there needs to be some significant infrastructure investment in this country, just for disaster recovery and protection of our infrastructure to start from a technology base. So that's the OPEB. And we'll finish just lastly on the 457 and 401A. No shock, as the markets do well, your funds continue to grow and grow. And what was about 20 million 3 years ago, you're now at about 28 million, the employees' money. The other good news that I like to see from this is you're trending positively from a participant engagement point of view. As you can see, participating employees have gone up from 395 to 474. The participation rate is increased from 15 up to about 17%. The amount that they're deferring is increasing. So it's all good positive trends that folks are now kind of getting into this. Obviously, we'd love to see those numbers continue to improve more. And unfortunately, this past year has not been a great time for engagement because of the pandemic. But hopefully, through the fall here, we'll be able to get a little bit more engagement and in front of folks. Your funds perform well for the quarter. One change, I mentioned it last time, what we were looking to do, and we finally got approval from Empower, so you should look to roll this out, probably start in the fall, but probably the start of Q4 here, just because of blackout dates, is they have agreed to put on their Vanguard institutional target date funds for your plan. Right now, they use the Great West ones, which are Empower's own funds, and they're quite expensive. Vanguard funds, and you can get in the institutional share classes on your platform because you've got 28 million, they're 9 basis points. So basically, any employee in your in this plan can be invested in their retirement plan for 9 basis points, which, we can't even do that ourselves as
So you're losing me.
as
You're
individuals.
changing what that affects?
The target
people?
date.
Target date's
date.
fine.
The target date. Okay.
Yeah. On the premise that, over 90% of your expected return is driven by your asset allocation, okay? So for 99% of folks out there, it's best, what is the ideal asset allocation? Well, that target dates take care of that for you from an age-related basis point of view, and then implement that as lower cost as possible. And that's really the theory behind it and the trends that we're seeing in these markets. And we're now starting to be able to go to some of these record keepers and put pressure on them to add these low-cost asset allocation ones. And they want to keep the
We
business.
did have to put pressure on them, too. They didn't want to do it because,
Because they have their own
Great West is
proprietary
really a life
funds.
insurance company. They're not an investment company, so their expenses are higher.
Yeah.
It's not fair to the employees not to have this Vanguard option.
We've had this program for many, many years, right?
Yeah.
I don't know
So,
when it started.
It started the day I started, I think, yeah.
yeah, the new
Three
plan
and a
did.
half years.
You had plans before that with Nationwide.
Right,
Remember
right,
Cannies?
but
And
we
then
changed,
their
yeah.
fees were like 1.8%.
Right.
And then you really
And we
took your
changed,
fees
yeah.
down with Empower. Well, now, this is now another step
Okay.
down for you. So,
We made adjustments to the funds that are in there to find better funds for the people.
Yeah.
And he and Holly constantly look at that and advise me, and we make decisions about
Yeah.
that, too.
we haven't done
But
any
this is a
change.
big one. This means a lot of money to the employees.
Yeah.
They don't realize it, but, the compounding effect of not having a lower expense ratio is significant.
Yeah. In fact, and the reason why when you look, this next page is at the bottom here, these are your Great West ones. Always been, expenses are the worst, kind of the worst around. Remember when they came in and gave you that low cost for the record keeping when we did the RFP 4 years ago? It was on the back of you need to put their funds in. Well, now we got it's great that they're going to keep the low record keeping fee, and we can go to cheaper asset allocation funds. So there's just an evolution within that industry, and that's pretty much it. The DC.
Great.
Okay.
Hopefully the PowerPoint slide helped folks that were watching.
Yeah. At least it actually worked for me. I don't need my glasses with it. It's bigger than my writing.
Any other questions for Lee? Thank you so much for coming in and taking the time to share with us.
You're very welcome. Thank you.
Greg, were there any executive sessions?
There were not. No
None.
executive
Okay, let me see if I can get back here quickly. All right. And we will open it up for any public comment. Hearing none, if we could have a motion to adjourn.
I'll make a motion to adjourn the meeting.
Second?
I have a motion and a second. Any discussion? Hearing none, all those in favor of adjourning, say aye.
Aye.
Opposed, nay. We are adjourned. Thanks, everyone who stuck with us for watching. It was a little bit longer than normal today, and have a great day. Thanks.